Okay, now let's look at Aditya Birla Capital. Grasim is increasing stake in Aditya Birla Capital, which means indirectly Grasim is putting capital infusion in Aditya Birla Capital. Aditya Birla Capital has gone through a change of management, change of CEO. They are looking at rebooting the entire retail book, and they are looking at restructuring the entire organization. It has been one of those performing stocks, and typically markets, they always know that if there is a change of a leader, if a strong leader kicks in, things could automatically change for that business. And we've seen that, for example, in ICICI Bank. We've seen that, for example, in Eureka Forbes. That stock has just gone through the roof. Aditya Birla Capital, OEB Capital, the stock in the pre-open session is up by 2%. Kunal, is the stock headed towards 200 soon and very soon?
Well, I would not sense soon, but then I think eventually yes, because the stock, I think I remember post results, the stock had fallen down some 8 to 10% from 174.75 to I think 160 or thereabouts, and from there it's now getting into a recovery phase. So post that the stock has seen a very good recovery. It's trying to come back towards that 175 mark, which could be a breakout point for AB Capital. And looking at the previous history of the chart patterns, it's been more of a slow, steady, and a gradual mover on the upside. So I would expect 200 as a potential target for AB Capital, but my sense is that it may not come very soon for the stock, at least looking at the previous historical trends.
Nuresh, where is Bharti? I mean, I haven't spoken. It's been almost a week, and in this entire week, we've not discussed Bharti. There used to be a time when we would discuss Bharti as every second question.
The stock has been just going slow and steady. The daily volatility is pretty low, and that's the reason we don't look at it. It saw a spike on that MSCI day. It went up almost to 880 levels and then flipped back to 830. We are still at 830. The stock is not far away from an all-time high. It's been a slow and laborious trend here. It's not been making sharp moves. But the short-term breakout is done at 815 to 820. The trend is positive. The previous highs are at 860 levels. That's the previous all-time high. Does not look like a stock which could go into a strong momentum, but yes, slowly expecting it to go towards 900, 950. But momentum is not great. Trend is still positive.
But what about the index calls then? What is it that our chartists are advising? Let's find out their recommendations as the pre-open rates are floating around the 18,550 mark. There's been a lot of headway as well on the global news with respect to the debt ceiling approval. Well, it's a whole recommendation from two of our chartists, but Naresh believes that you can look to buy the index even at the current levels. But the moodometer, of course, tilting towards hold. That's what the majority consensus call is. Yesterday was a bit of a rough day for financials as a whole. The Nifty Bank call this morning is to hold. That's what majority is suggesting. Though remember, Naresh saying it's a buy on the Nifty as well as on the Nifty Bank.
Well, in Delhi, and when you are in Delhi, what do you do? Well, you always eat chola bhatura, and that's what we've been doing. Yesterday, well, it was a treat to go and enjoy chola bhatura, and Ajay, me, Ravi, Prakash, we did get a chance to, well, that's not chole bhature, that's, the ET Now team, a blend of both Delhi and Bombay. We are in the capital for IC, and today it's day 2 of IC. Yesterday we had Shankar Sharma, we had Nilesh Shah, the very interesting session. Anand Jain's son, or Harsh Jain, the CEO and co-founder of Dream 11. What an extraordinary franchise he's built. But this is the more important, picture, Anisha.
Oh, well, yes.
Ajay is smiling, Prakash is laughing, Ravi is also happy.
But we are sulking here. We are sulking here.
I paid the bill, so I had to be serious.
We are the ones sulking here because we are not getting any of that chole bhature. It's breakfast time. You need to get that for us when you come back.
Zomato Intercity.
Okay, so how about we do something? Let's keep Saturday on tomorrow, both for Avan and you. I'll land at 12 o'clock, chole bhature warm from Delhi, provided you come to work.
You can always invite us to your home for a lunch, Nikunj. We don't have to be in an office itself on Saturdays.
No. It's an official trip. It's an official trip, so we'll keep it that way.
Or you take us one day to Delhi and then we can enjoy it with you guys as well, because that looks really tempting. Did you enjoy it, Nikunj?
This is the picture before the meal was served, and if you would have taken the picture after we finished, trust me, not even a morsel was left on the table.
We can totally imagine that. So it's your cheat day when you are in Delhi. So have as many calories as you can with that chole bhature and the parathas and everything, which is a delicacy of Delhi. So interesting as far as the food is concerned of Delhi. But what's been the atmosphere like, Nikunj? You've been speaking with a whole host of people. Looks like extremely bullish on India, right?
We got that magic number going, nice little chat on when Sensex will touch 1 lakh. And, I think that is the new narrative, if you frankly ask me, which India will soon start talking about. We're simply setting the tone. We started with Chris Wood, Sensex hoga 1 lakh. Then Nilesh endorsed it, Shankar Sharma endorsed it, Sandeep Sabharwal is speaking about it. Good old Mark Mobius, he said, yep, very soon. The bull run in Indian market has just about started. So my limited point is that while you can look at the market from the prism of near term, which is today, tomorrow, this month, next month, general election cycle, what will happen to May 2024. In hindsight, when we'll look back and we will say, okay, those were pit stops that added to market volatility. And for a smart investor, volatility is always your best friend because it gives you that edge to buy when others are, in a sense, thinking about short-term, gyrations. But I think that's the beauty of the market, Nisha, that the more you think long-term, the more gains you're going to make. The more you try and time the market, at least in the short term, if you're a long-term portfolio investor, I think your gains will not be there. What is important here is to understand is that where the economy and where markets are headed. And I think the sense which I've got here, both in terms of action, aspiration, understanding, direction, it seems to be that India is right now on a one-way kind of an acceleration. Of course, there would be problems. I mean, there's nothing linear in the world. But eventually, how we've emerged out of the Ukraine war, how inflation was being managed, how the COVID crisis was managed, everything seems to be saying that if not today, a new all-time high on the Nifty should come soon. Actually, we'll start the counter also. I don't think we are very far away from an all-time high on the Nifty. So we'll try and establish it with the live counter also. We're almost at 18,600. I think 200 points more, and then you have a print of a new high on the Nifty. I'm just jogging my memory here. But it's a green. Green on the Nifty, green on the Sensex, green on the Bank Nifty. Across the board, I think markets are looking strong. And look at the market breadth. It's near perfect. It is near perfect. You are going towards the new high, and you're going towards the new high with strong market breadth. So the market, in a sense, is getting a push for itself so that it can really make a new high. And that, I think, is the most beautiful part of this market, that you're marching towards the new high. And the zing in the market actually is also coming from the tone and tonality in terms of where the market breadth is headed.
Absolutely, the mid-cap index has managed to scale a fresh record high as we speak. The small-cap index was at 52-week high levels. It's trending higher, so of course, a fresh 52-week high as far as the small-cap index is concerned. And look at that impressive market breadth. 1,400 stocks advancing to 183 stocks declining. All the sectors have opened in the green. It's the realty space which is leading from the front. So the likes of Lodha, Mahindra Lifespace are some of the counters to watch out for. The global rally is also impacting the metals today. So Hindalco, Adani Enterprises, Jindal Stainless, these are the counters which are doing well. And the banking names are also seeing quite a bit of bounce back. Look at AU Small Finance Bank. After Chris Wood has added it to his portfolio, AU Small Finance Bank has also started in the green with a gain of around 0.8%. In terms of the broader markets, need to highlight what's happening with Info Edge. Remember, the company had already taken the impairment of around that 280 crore rupees on account of 4B, but now they have initiated a forensic audit. So Info Edge is the stock which is in focus on account of that. Biocon has opened with a cut of almost 2.5%. Infosys, of course, is seeing that technical reaction because it goes ex-dividend today. Separately, you have the auto names which are doing quite well. Case in point being Hero Moto, which has started with quite a bit of gusto. You have Maruti also reacting to a good set of numbers coming in as far as the May performance is concerned. Cyient continues its up move after that solid rally that we have seen over the last 2 to 3 sessions. Cyient is again higher by 5% today. Zomato also trending with a gain of around 2.5%. And then you have other IT names like KPIT Tech, etc., which are also doing well. So not much to complain at all at this point of time. There are comfortably more gainers than losers.
Again, it's the broader markets that are taking the lead. Yes, you highlighted some of those mid-cap IT names, but on the flip side as well, I just want to identify some losers. Edelweiss Financial, Ashok Leyland, Amara Raja, something like Biocon as well, Brigade Enterprises. Those are some of the stocks that are a little bit under pressure in today's trading session. But by and large, it's a healthy start to the markets. You've got support coming in from pretty much all quarters, I should say. Real estate, metals and auto leading the way with all sectoral indices in the green. No wonder then that the breadth is reflecting clearly in favor of the gaining side. Let's get in a sense as to what our chartists make of the market move at 18,554. Your views on the index, and Kunal, your first trade.
Well, absolutely. I think it's a good open for the indices. After yesterday's negativity, especially in the second half, this seems to be a good opening for the index. We've come back about that 80,500 mark quite comfortably, and 80,600 on the futures. In terms of opening trade, I would be bullish on pharma index. So Sun Pharma is a stock which I would look to trade in the open. It looks extremely attractive as a setup. The stock confirming a breakout above its 200-day moving average. So it looks very attractive as a setup.
So going all the way for pharma, Sun Pharma is another stock that Kunal likes at this point of time. But what's the first trade that you are punching in, Naresh?
So that would be a buy on Mahindra and Mahindra Finance. The stock is getting into a new 52-week high. The trend still remains up. The leadership stock in the NBFC space, so expecting it to continue.
All right, Vikas Kumar Jain joins us now. Let's understand that what currently brokerages are indicating and advocating to their clients after this strong summer 2023 rally. Right, nice, bright yellow tie. That seems to be the mood of the market. Nice, bright, chirpy, right?
Absolutely. So it's taken a time to come, because the first quarter, I remember towards almost to the last day of March, we were about to create a fresh record of 4 negative months, and that's around the time when it kind of turned around. So it's taken a time to come, but clearly the mood has changed materially from that point onwards. However, we are perhaps at a time where there are balancing factors on both sides. So there is perhaps this popular complaint that we had for a large part of the last 2 years that India is very extended on relative valuations on many parameters is now less so a case. It isn't that extended. Like for example, there was a period when India was clearly the most expensive market. That's not the case at the current juncture. However, on the other hand, there is, if we were to try and be imaginative, there's only so much room that we have for significant upsides from that perspective. But from a more near-term perspective, I would say that we should very clearly watch out for how yields in general do, because that is what is going to be a kind of a guide to how markets how much more there is to this rally. And for that point, let's see, even today, the unemployment numbers that come out defines what the Fed will do later in the month. And then our own monsoons, which also we should get more clarity on in terms of how they are progressing in the coming days. So clearly, it's something where after a rally, we have some very important events to kind of digest. And then that is going to decide how much more room we have on the upside.
Because, so what has so far done the trick for us? Is it liquidity? Is it strong earning season for the quarter gone by? Or this is simple readjustment after excesses of 2022? I mean, why are markets going up as if there is no tomorrow? At the beginning of the year, like you rightly pointed out, 9 out of 10 brokerages had a view of a flat year for market. It's turned out to be a good year so far, and we've had good gains in the first half itself.
Well, I think just to kind of maybe bring that point out, it's 2 parts. Firstly, it's so far not been a great year. It's because we are taking from the lows of March is why suddenly we are feeling so bright, like you said. But if I were to look at, I think we started the year around 18,100 or so, if I remember correctly, then that's something where we've done 3% for the year. Yeah, it's fine, but it's not something, I'm sure we would have underperformed Gold, we would have underperformed, the duration bonds, we would have underperformed even or done just in line with fixed deposits. So it's not that we've had a great rally right from the start of the calendar year. It is just that we took a big beating and then we were going higher. Yes, you're right. I think what was happening was October to March is when Indian markets took a breather. October is when India's relative valuations versus China versus the bigger peer complex had become extreme. And then suddenly India actually started underperforming as the whole reopening trade in China kind of played out. Now, what that did was also, it was more like an underperformance rather than any big pullback, because the pullback we had was more like a 10% kind of a pullback, but significant underperformance. And that's where our relative valuations also kind of had a healthy correction. But over the last 1 or 2 months, clearly you're right. It's been up to an extent flows, which has helped India. But that is where I think we need to be a bit more careful, because that is where some problem might lie. Let me just, since it's FII flows which are dominating to a large extent in the month gone by, it looks like, I think that is where some problems can also come in, because China, from their January highs, which is what they hit towards the end of January, is down nearly 20-25%. Now, why that is relevant, I think the best situation for India is a flat to averagely positive Chinese market, because 95% of the foreign flows that comes into India are basket flows. So basically, these are EM or Asia X baskets where money comes in. China creates a big perception to attract that flow. If China is not doing well, my worry is those inflows could turn into outflows again. And on top of it, if there is an event like a recession which creates a risk off in the global environment, then investing in EMs would not be the natural tendency for a lot of these developed market investors. So that's where we could be a bit strangled for inflows incrementally. Maybe there is a little bit of inflows which might come in. Maybe some of the people who had started focusing more on China might start feeling that perhaps it was a mistake. This market is again giving up pretty big and maybe we'll come back to India. But when overall flows in the funds, they turn into outflows, then there's only so much that you can do to drive inflows into India. And this is happening at a time where debt is reasonably attractive in India. So, I do not expect, unlike 2022, where we had significantly large domestic inflows to offset the massive selling that we saw from FIIs. I'm not sure if we can repeat something like that this time. So that's something where we should be a bit careful. So ideally, China falling much more eventually is going to have an impact even on our market.
Fair. Because the consensus positioning in the market is around financials. Do you think it's a consensus which will ensure that the upside and the future gains will also be compromised? Because, they always say that majority never gives you best gains.
Well, I mean, that obviously there are times in which the trick about doing this contra thing is to know when to be contra. I would say that, yes, you're right that at a particular point, there is a lot of money to be made for investors who can play the contra trade very well. And for us, like, for example, we have our proprietary India Bull Bear Index. That has really helped us in giving a sense on when we should be contra on the market. Like, for example, right at the exact low of March, that indicator gave us an extreme bearish signal that everybody was very bearish and it had become almost consensus. And that's when we turned bullish and added beta to our portfolio. But I would say that is something that we should kind of look at it. But there are ways to look at it. Is positioning so heavy is one way, but on the other hand, our valuation is so stretched. But even within financials, if you look at the nature of the rally that we've had from March, it's something which is, again, brings me to the point on yields. The stuff that has done well is actually more the kind of stocks which gain from lower cost of funds in terms of yields falling, whether it is real estate, whether it is NBFC, or whether it is the less big bank or the smaller banks, which are more dependent or less dependent on CASA. So essentially, that is why with having breached below 7%, I think I am still not sure if we can go much lower. That's something which we'll have to, maybe the monsoon or what the Fed does will define that. But if we do not have incremental gains on that side, can these same set of stocks really lead the rally higher if yields do not have further downside, is something for us to see. So I think within financials also, perhaps the flavor has changed more towards the NBFC kind of stocks. So I think there is still, that is a consensus trade. In fact, we are also part of that consensus trade. There will be a point where this whole rally in terms of yields play out and we get more and more certain about rate cuts. And historically, what we have seen, the point when we get close to rate cut is the point where globally, somehow technology starts doing better than banks. Closer home in India, perhaps technology has some bit of digesting to take in terms of how bad demand could be. But I think if that plays out through the commentary of the upcoming quarter and there is further rally in banks, we could get to that point. But I'm not sure if we are there yet on an overall financials perspective.
Hi Vikas, this is Anisha also joining into the conversation. I just wanted to roll back to the initial answer that you were talking about, that you're not very enthused by the market rally at this point of time because we've only seen a jump from the March lows, but on a YTD basis, we're still flat. And I also understand that you've cut your EPS estimates for Nifty by 2 to 3% after this earnings season. What does it do to your own assumption of the Nifty levels, let's say by the end of the year? What is the realistic return expectation that you have for the calendar year 2023 now?
That's a fair question. So I think, yes, our analysts did cut estimates by about 2 to 3% for Nifty companies overall. With that, we are now 3 to 6% below consensus on Nifty EPS. Now, if I were to use, we have this favored valuation benchmark where we try and compare equity valuations to bond valuations. We favor that much more than the absolute PE, which is a popular benchmark when looking at equity valuations. And if I were to, that is right now, somewhere between average and stretched. That is where it is in terms of difference between bond yield and earnings yield. If I were to assume that, what is the bull case in this situation? That is, if I were to use the bull case or stretch it out with assuming that yields stay at about 7% or so, and you use CLSA estimates, then in the bull case, we have about a 10% rally or so, maybe somewhere between 2,500 to 21,000 is what comes out as the bull case at the end of this calendar year, since that is the question, which if you were to kind of take a look back, would be in the bull case about a 12-13% return from the time when we started a little over 18,000 in terms of the year. But in the base case, we see a little bit of a downside, a small downside from here to now, to the end of the year. So basically what I'm trying to say is that for a market to have a much stronger rally, more room has to get created by yields falling even more. And for that to happen, perhaps we need to get more, in both in the US as well as in India, get further certainty that inflation is cooling off rather dramatically, or and in case of India also, the monsoon is okay and we don't have to worry about agri-inflation in terms of food prices. So those are the things which need to play out. We also need to keep in mind that market in a way has, after the last RBI meeting, has in a way now started anticipating that if there will be a cut soon, if there are political compulsions going into the national election early next year, will the government be far more focused on inflation and not give a cut before that? That's the other thing that we have to need to deal closer home in terms of the politics, which becomes more and more active as we get towards the end of the year. But that's really your answer. In the bull case, another 10% kind of a rally using our estimate, which are 3 to 6% below consensus.
Vikash, hi, morning. While you have been walking us through your strategy as to what one should do, there's also what not to do. And one of the lessons learned, as per your report, is that avoid getting overly tactical. Can you just walk us through examples of having done this, or any, classic mistakes that you'd say now can be avoided?
So, I would say that there is a balance here. In our discussions with fund managers, we find two more popular trades, particularly for people dealing money with India. I think there is a bigger population of fund managers who are far more micro and stock specific. Okay. And on the other hand, there is also a section of fund managers who want to, avoid being tactical at all. I would say there is clearly some kind of a balance which is needed. And it's really to find that balance, because at times what you might call as tactical can lead to 10-20% moves in stocks. Now, particularly if you think about the markets that we've been over the last 2 years or so, which is the market has been largely flat. I think, the note that you're referring to is the one where we talk about, the hits and misses for our portfolio, which we've been running for about little less than 2.5 years. And it's a large and liquid stock focused portfolio. Now, in a large and liquid stock portfolio, when the Nifty is flat, that is for, 2-3% up in the matter of 2 years, you need to get more and more active about it. So, you can't really say, and that's where I was saying that maybe our proprietary bull bear index has done pretty well in signaling us when there is an extreme point for the Nifty, and we've kind of accordingly moved beta in our portfolio. There is one example that I do highlight of a particular stock where, we were okay and we were pretty, positive on their longer term outlook. I got a little bit too worried up about the more near term news flow, which could have been a bit more negative. And that's where I kind of became more tactical about it and did miss out on the opportunity to correct my mistake later. And that stock went up to outperform Nifty by some 40-45 percentage points in a matter of less than 2 years since I exited. So that's a mistake that I did do at that point of time. So, it's really to try and find the balance. That was also, within the first 6 months of me trying to run the portfolio. So that's a continuous learning process. And, maybe that's one clear mistake that I have highlighted. I hope to make much lesser of them going ahead. Let's see how it goes.
Well, Vikash, even if you have like a 60-70% success ratio, it's more than enough in this market, right? But I'm curious, is that mistake Bharti Airtel or ITC or something else?
See, I think, let's not get into stock specific, but the note that you have already mentions. So, it's something where clearly there are certain misses that are also there highlighted, which we just did not look at. Some of the reasons for that is we were not sure if having them in our portfolio would make any sense, because many clients were worried about ESG concerns. So there was that two minds that we had in. So they were absolute misses. They never featured in our portfolio, but these were star stocks, and we should have thought more deeply about them. But there were others where we exited at the wrong time. And so, there are these mistakes which we have highlighted.
I think I get it from the note that ITC, Power Grid, Coal India were the misses that were never a part of the portfolio, and Bharti Airtel is something that you perhaps exited a little too soon. But Vikas, just coming back to the point about the divergent move that we are seeing in the market at this point of time in the large caps versus the mid cap and small cap space, the likes of Reliance, HDFC Twins, there have been stark underperformers. Do you expect this trend to continue for the rest of the year, especially on Reliance and HDFC Twins?
See, part of us should actually be happy about this trend. In fact, I would say India is one of the more unique markets where it's a much wider rally. And that's why, I am still not willing to call for a top here. Because if you were to look at participation, it's quite encouraging, which is very different from, say, the US, where the popular complaint is that it's a very, very narrow rally. It's only a few stocks, the AI basket and the NASDAQ stocks, which are driving the rally, and the wider market is just not participating. That in a way gives a sense of the kind of bullish trend which is there. Perhaps it's part of that whole multi-year bullish India story which is there. And that's why when people kind of came back in terms of FII putting money into the stocks, they were willing to find these ideas and go much deeper into the market because of trying to play the longer term trend. So part of it we should be happy about. But on the other hand, since, we could, if this rally has more legs, we could get to a point where we are getting more stretched. Some of these names, if they, the couple of big names that you have highlighted, some of them, if they are at more attractive valuations, I would say that one needs to be very careful about not being significantly underweight on those names. Because what could happen is if suddenly the market's mood changes, these could be seen as, and people tend to hug the benchmark, these could be seen as places to hide. So it's really from that perspective, there's a part of me which is happy that it's a wider rally. But on the other hand, as we get more and more stretched on this rally, we should not lose an eye on some of those names, because they start showing their more defensive characteristics in a situation where people want to actually get closer to the benchmark.
Mark Mobius said, yes, it's possible. Chris Wood said he'll be disappointed if it doesn't happen. Shankar Sharma said he's absolutely certain it will. I'm talking about the Sensex reaching that coveted 1 lakh mark. And of course, it's now only a matter of time. But what is your thesis, given the fact that we are growing at a healthy clip for the economy, as to when this could potentially happen?
See, I think the trick for a strategist is always to not give the timing and give an opinion and just stop there. So, I would say that clearly we are in a multi-year bull market for India, but within that, we are not in an island. We must, in all of this bullishness, there could be periods where the markets might have 20-30% pullbacks. We had one recently, the one at the top in October, to the point when in October 21 to June 22 was a 20% pullback, which happened all within this reasonably strong macro and all of that. So it's many a times it's more about your timing versus mine. Maybe everybody can be right about it. It's really the timing. And basically like there's that famous saying by Warren Buffett that it's going to be volatile. So it's basically volatility is going to be the name of the game. And even within that overall bullishness, we need to keep our eye on the fact that there could be periods when things get stretched and there will be pullbacks. Those should be, if you are rightly positioned, could be used as great entry points to play that longer term. So it's really, I would not hazard a guess on the timing, but clearly I think getting there should not be much of a doubt.
As to not give out the timing of when we'll reach that mark. But Vikas, I remember the last time we spoke with you, you called IT that could be one of those tactical trades that could play out, and it's really played out very smartly, especially in the mid-cap and the small-cap space. Tell us, what is the next tactical trade that you are seeing with sector, with stocks?
So I would say that, that's, at times there are 3 or 4 big parts of the market. Banking and IT are clearly the 2 of them. If one, since our portfolio is a large and liquid portfolio, it's very important for us to get the choice between the 2 right, because that might very well define how we do on the portfolio. We were lucky enough to actually, that was coincidental, because like I told you that towards the end of March, we wanted to add beta to our portfolio. And in that process, we actually went significantly underweight IT. We got rid of one of the names which within days, luckily for us, had a big collapse. We are right now pretty underweight IT. There could be a point where we start getting more comfortable about cuts by the US as well as Indian central banks. And that is where, by that time, if IT valuations become even more palatable, there could be a point where there could be a shift in favor of IT against banks. I don't think we are at that point yet, but yes, that could very well happen in the coming months. So that is something that we should kind of bear in mind, but not really acting at this point of time. At this point of time, from the point of that March lows, we've been very bearish on IT, very underweight on IT.
Okay, it's interesting to get that strategy from you, even though you didn't divulge too many details about your regrets or timelines for the Sensex hitting 1 lakh. I think it's sufficient that you've really shared with us your overall market outlook. All right, let's quickly glance at the markets. It's 80,550, up 0.5% for the broader markets. And here are some stocks that stand out on the Nifty 100 in trade today. You've got Hero Moto, DLF, ABB, as well as HUL. Time for a very short break. Stay with us for lots more lined up.
Welcome back. Well, the market is holding on steady, but let's take a look at some of the buzzers. Cyient is one stock which is soaring in the trading session yet again, an 8% up move. Let me tell you, there's no incremental fundamental news. Yes, there is this entire expectation that Cyient DLM will come out with its IPO soon, and that's expected to have a bit of a upward bias towards the valuation. We should pull up the intraday chart of Cyient, and not just intraday. Let's pull up a 5-day chart, a 1-month chart, even a YTD chart, and that will tell you this stock has had a massive outperformance versus the IT index. It's up, 80-90% this year so far. It's up almost 12% this week itself. So quite a bit of outperformance that you can see as far as Cyient is concerned. It's not alone. KPIT Tech is sitting at life high levels, and that stock too has seen a massive rally. And also take a look at Zomato. That's managed to scale past the level of 70 yet again. It's now sitting at 72, a 6.5% gain coming in there. Soba Industries had a massive run yesterday, a 7 to 8% jump up. Today as well, it's gaining almost 5% in a trading session. And you also have Kalyan Jewelers, etc., which are in focus. Also, let's discuss what's happening with Biocon. That stock is down almost 3% in the trading session. We understand that Coherus, which is a global biotech player, is looking at launching a biosimilar, which is Humira, at 85% discount. Now, the reason why it's important for Biocon is the fact that they were also going to launch a similar drug, and the launch was expected to happen in the month of July. Now, we understand that perhaps another player is coming into the market at 85% discount. So that's the reason you are seeing that reaction. But let's welcome on board Mr. Girish Kausgi as well. He's the MD and CEO at PNB Housing Finance. Girish, thank you so much for making time and speaking with us. First up, just wanted to understand from you, how's the momentum on the ground at this point of time? There were this talk that there might be a bit of plateauing of demand growth and credit growth going forward. What's been the reading so far in the month of April, May, and now June?
Good morning. I think if you look at demand, it is very good since last couple of years. We clocked Q4 for us was the highest ever quarter in last 3.5 years in terms of disbursement growth, in terms of book growth, and also in terms of collections. So I think market is pretty robust. Market is good. Typically, if you see Q1 will be slightly muted compared to Q4 of any given year. Otherwise, if you look at demand, it is pretty good.
Fair enough. Wanted to also understand the outlook when it comes to your share in the housing finance space, because that has declined to 4.5% from 6.6% in March 20. Your AUM growth is also a bit muted. What are the projections on these two parameters, and what really led to this decline?
So if you look at for next couple of years, we'll be able to grow book by about 17-18%. In terms of disbursement, it will be about 22+%. I think that's the guidance. What you would like to give.
If you look at the internals of your book, it looks like that the corporate book has declined by 50%. I understand part of it was intentional and part of it was on account of write-offs, ARC sales, etc. as well. But going forward, what's the mix you expect in retail versus corporates?
It was a conscious call to bring down the corporate book since we saw stress in that book, and therefore now if you see, we have really resolved quite a few cases in last few quarters. And today, if you look at a corporate NPA, we have just 2 accounts, and out of 2 accounts, 1 account constitutes to almost about 92%, which is backed by a leading developer in the country. So we are pretty much comfortable on that, and even on the other account, we have resolution in place. So I think more or less corporate, in terms of working on resolution is almost sorted. We still have a book of close to 3,800 crores. So we want to run down that book and then think of restarting, but that will take time. We are not in a hurry. As of now, the focus is completely going to be on growing retail book. We are into prime business. We just started Roshni, which is affordable business last quarter. That will gain a lot of traction in this year. So the focus for next few quarters is going to be on retail.
Girish, now that interest rates are turning benign, what typically happens to HFCs in terms of their NIMs? Because in a rising interest rate environment, banks, they make more money because their deposits are, they get repriced later on. What happens to NBFCs in a benign interest rate cycle? Do you take advantage or are you at a disadvantage?
I think typically when the interest rates are going up, it will help NBFCs and HFCs in terms of improving their spread and NIM. And there will be a lag effect. And when the rate goes down, obviously, because what happens is that in terms of absolute revenue, it's going to be less when the rate goes down. And it is quite opposite when the rate goes up. So when the interest rate goes up, obviously it's going to help NBFCs and HFCs, but the rate should not go up drastically as well, because if it goes up drastically, it will have impact on the default percentage.
Okay. Do you think the entire consumer, the entire HFC space is getting extremely competitive because you've got SBI, which is unleashed a price war. PNB has got fantastic rates now. Private companies like HDFC, they are also giving very competitive rates. Do you think this is a business where growth would be there, but competition will keep the NIMs under pressure?
Actually, if you look at competition, competition is there since many years, many decades. I think there was heightened activity in terms of banks competing more with HFCs and NBFCs during and immediately after COVID. So we saw maximum competition from banks in Q3 and Q4 of FY20. I think that is when there was severe competition. Even during that time, when there was a flight of book from HFC, NBFC to banks, HFCs and NBFCs did well, not just on asset quality, even in terms of disbursements and growth. So I think competition is there, it will be there, but I think we have different segments, different geography to operate, and market is quite large. So we don't see that as a major threat.
Right. With the cleanup of balance sheet, asset quality as well has improved. What is your outlook with respect to credit costs? How are you looking at slippages?
So if you look at our GNPA 1 year back, it was about 8.12%. Now it is 3.83%. So the drop is more than 50%. And this is true both in terms of corporate as well as retail. Now, in terms of GNPA, especially on retail, because now our focus is largely on retail and corporate is more or less sorted, I think in next, let's say 4 to 5 quarters time, our GNPA would be comparable with some of the best companies in the industry.
Okay, so the GNPAs are going to be the best versus industry. But before we let you go, Greesh, just give us a sense with respect to how this will pan out with respect to your net interest margins at the end of the day. What could be the return on asset that would be sustainable?
In terms of NIM, for a company like PNB Housing, it will be around 3.5%. And we have just now got into affordable. I think once we start building up that book, where we will see a lot of traction from this year onwards, because we just started last quarter, right? I think that should definitely aid in terms of lifting the NIM from the current level. Otherwise, on a steady state for next few quarters, I think NIM of 3.5 and spread of 2.5 should hold. And with affordable kicking in, I think there should be slight improvement from the current levels.
Given the fact you just did a rights issue, I'm guessing there's no other fundraise on the cards, right? Pretty much okay in terms of capital at this point of time for the year.
Oh, yes. We just did a rights issue now, and now our CAR is 30%. So this is going to be used for growth, and we don't have any requirement of raising capital in the next few years.
On that note, we let you go. Appreciate you joining us on the show this morning. So that's the commentary coming in from the management of PNB Housing. For the market, we are holding on steady. So let's get you some big market voices as well. Managing editor Nikunj Dalmia was in discussion with market veterans like Nilesh Shah, Mark Mobius and Shankar Sharma on the sidelines of the India Economic Conclave. Listen in to that riveting conversation.
As most of you will agree, India is a rising story.
वो पता है सर, वो आयशा ने बता दिया. India is great, India is rising. We are the 5th largest market economy in the world. Now you've come, everybody is waiting for you. They want to know, Nilesh bhai, how can you invest and make money? That's it. बस और कुछ नहीं. एक सवाल में I'll end this discussion.
When you are giving me a low volley, and I was resisting not to hit it, but now I don't have a choice. Just invest in Kotak Mutual Fund and that's it.
Shankar Sharma, you don't manage public money. You don't manage public money. But if somebody comes to you that way, Shankar bhai, manage public money. But before that, give us an idea, how will you manage public money?
Let me give you the reason why right now I don't manage it. You should manage public money in a bear market because that assures your bread and butter. In a bull market, you should manage your own money because why should you settle for 0.5% when you can make 1,000%? So you see, I'm very flexible. I'll switch between public and personal money depending on the market. So I'm managing personal money because I'm very, very bullish. I can make 1,000%. So, and that's what you're making and you will continue to make in India. I mean, this is... I get a lot, I hear a lot on Twitter that you guys were lucky you were born in the 60s, so you entered the markets, when you were in your 20s, which was 35 years back. India was small, big opportunities. You could make outsized gains. But I disagree. I think with the larger size, the opportunities, the scale itself becomes much larger, much, much larger. So today, it's actually probably the best time in the history of modern India that you should be out there investing. Because a $3 trillion economy will grow. You will simply add $150, $200 billion in GDP every year, which used to be the GDP when I entered the market. So, just the scale is massive. Nothing is lost. It's not too late. Get in now.
Mark, how are you approaching this market? Indian markets are not far away from an all-time high. The Bank Nifty last week hit an all-time high. For somebody who's not invested in the market right now, according to you, how is the risk-reward ratio stacked up?
I think, one of the things we learned from this session we just experienced, this idea of consciousness and positivity. In other words, the power of positive thinking is so critical when you're investing. Because as you just said, it doesn't make any difference when you're going to be investing. It's a matter of being invested, because in the long run, the markets will go up. There will be periods of bear markets, yes, but in the long run, the bull market will be very, very fruitful for investors. So if you ask me, should we invest now? Yes, we should be invested now. And particularly when we look at India with this incredible growth, 7% growth for a population of over 1.4 billion people. This is an incredible accomplishment. And this, I believe, will continue going forward. So the best time to invest is when you have money.
Mark, first, thank you that you've been part of, the IC conference from last couple of years. In 2017, when you came for the first edition of IC in Mumbai, you had one investment in India, then it became two. Last time when we spoke, it is three. This is the fourth time you've come to IC. So can I say that you have 4 investments in India now?
It's amazing that you remember that. And it's also amazing we now have 4 investments in India.
So what are those 4 investments? I only know 3. Apollo, Persistent, and then I'm lost the last 2 names.
Well, of course, we have the Apollo.
Yeah, that we know.
The Apollo.
Persistent, you've told us.
I'm not going to tell you what the other one is because we're still buying.
At every IC, you tell us a name. At every IC, you tell us a name.
Yeah,
so
basically, we're looking at technology fundamentally, and we're looking particularly in the future at hardware, because we believe that although India has made incredible accomplishments in software, India is the leader globally in software exports. We believe going forward, hardware is going to be very critical and very important in India. So semiconductors and businesses related to semiconductors will become more and more critical in India. In our portfolio, the largest investments we have before India are Taiwan, and that's because of the semiconductor industry. And we believe this is going to be coming to India.
So you own 4 stocks in India, and one of them is directly, indirectly a play on semiconductor.
Well, no, it's software.
Okay.
Semiconductors not yet, but I believe going forward, this is going to be important.
Okay. Shankar, you are looking at investing where you can make 1,000% return. How are you investing? Where are you investing? And which is the next stock which could give 1,000% return?
I'm meeting potentially one such company tomorrow.
Can I come with you?
Well, let me finish investing, and then you're most welcome to come with me.
So which is the last company you've already met? Tell me that one.
This morning I met one which I'm already invested in, and I think it's a great story. And I'm making about, not a lot, about 60% in less than 6 months' time. So we'll take that, right? I mean, that's not 1,000%.
आप blind खेल रहे हो. Scene की बात करते हैं.
No, but there are, I mean, I'm just really telling you, Nikunj, it is incredible, the entrepreneurial energy. It has never failed to amaze me. That the number of companies out there with fantastic business models and now promoters that generally improve their governance or being forced to improve their governance by more stringent laws. Whatever be the reason, at least there's better transparency and valuations are still not demanding. I mean, I can tell you, if you do a simple run and as media houses, you will, mid-teen multiples also decent sized companies are available. So this market is crazily undervalued at the mid and the small end of the market, for sure.
Now, notice the word crazily undervalued, and that's what I think we should focus on, that it's time to start doing treasure hunting in this kind of a market. So what we are at 18,500 on the index. I think Shankar, Mark and Nilesh bhai, all of them are of the view that abhi to party shuru hui hai. So Nilesh bhai, party kyun shuru hui hai? Why do you think right now the best is yet to come for the Indian markets? Because historically we've seen economy and markets, they don't run together.
So let me give two answers, one lighter way, one serious. There is a small bank in Maharashtra called Shamrao Vittal Bank. There is a big, large bank called Silicon Valley Bank in US. SVB is the 16th largest bank in America. A day has come where our Shamrao Vittal Bank has to say, when you talk about SVB going into bankruptcy, that is that American bank, not the Indian bank. ऐसा दिन आपने कभी सोचा था कि इंडिया में आएगा? So that's the lighter vein answer. That's why you have to invest here. But on a serious note, the state from where I come, Maharashtra, today Maharashtra has a GDP which is equivalent to India's GDP in 2005. In 17 years, Maharashtra has reached where India was yesterday. 2001, UP and Uttarakhand were combined. Today's UP and Uttarakhand combined is where India was in 2001. And there are three other states, Tamil Nadu, Gujarat and Karnataka. They are today having that GDP which India had in 2000. In about 20 years, these 6 states have reached where India was yesterday. Now, if all of us continue to work in similar fashion for next 20 years, these 6 states will create today's 5 India. And then there are 20 other states which are also doing something. This is the journey of 1 India to 5 India in just 6 states. This is the journey of 1 India to multiple India in terms of GDP growth over next 20 years. This is the reason why you should invest.
Yeah, in fact, coincidentally, just before this show, I was chatting with Ajay and had, in fact, coincidentally said the same data that I think Maharashtra must be about $1 trillion or so. And that's more than the GDP of Saudi Arabia, which is, I think, about $850 billion and maybe twice the size of UAE where I, reside. So just simply the scale of opportunity in each part of India, north, south, east, west, central itself is equal to several European countries, let alone, the Asian peers, which is why the smaller companies now have addressable markets, which are without even leaving their comfort zone of East India or Central India, they can do 400-500 crores of turnover, which wasn't there the case
I have a
before.
basic question. You like India? You can find small cap stocks which can give 1000% return. India is where the growth is. So आप दुबई में क्यों रहते हो? If India is so great, India में invest करना है, तो आप दुबई में क्यों रहते हो? India में रहना चाहिए.
Now I live in India quite a bit, as you know. I spend 4-5 months in a year in India, and 7-8 months in Dubai. It's fine.